Welcome to the News El Salvador SV podcast for this Monday, March 16th, 2026. In this space for conversation and reflection, we explore current global events together, the stories you need to know. You can support this project via PayPal or through crypto by leaving a contribution in Bitcoin, Ethereum, or, if you prefer, Solana, now enabled. You can find the links and addresses in the description. Find US on your favorite platform. Spotify, Amazon Music, Apple Podcasts, TuneIn Radio, or YouTube. We are on almost every platform. Share our podcast with your friends.
Absolutely. Please do share it.
So diving right in today, imagine that the Middle East is, well, it's burning, right? Global energy supplies are actively under attack, and traditional stock markets have just completely shut their doors for the weekend.
Right, because it's Saturday.
Exactly. So where do these desperate, institutional oil traders turn when Wall Street is just closed?
They have to go somewhere.
Right. Today, we're looking at how a kinetic war is actively shifting billions of dollars, literally, onto the blockchain. We are examining the massive shockwaves radiating out from this rapidly escalating 20-day-old war in the Middle East.
It's been a wild 20 days.
Yeah, it really has. So the mission for our deep dive today is to trace exactly how this military conflict is, breaking traditional financial markets, how it's bleeding over into the cryptocurrency space, and really forcing these massive corporate pivots.
Yeah, the ripple effects are huge.
They are. And finally, we're going to examine a major domestic security update right here in El Salvador, specifically regarding new life sentences for gang members.
Right, which is a massive structural change.
Huge. But before we unpack all this data for you, we need to state a really clear disclaimer regarding the highly charged geopolitical and military reports we're about to discuss.
Yeah, this is important.
Very important. We are maintaining strict neutrality here. We're simply unpacking the intelligence provided in these sources for you without taking any political sides.
Right, we're not endorsing anyone's actions here.
Exactly. We are neutrally reporting the contents of these government and military documents, and we are absolutely not endorsing any of the viewpoints, the actions, or the strategies of the political figures involved. Our goal is just to help you understand the mechanics of what is actually happening on a global scale.
And, stripping away that political rhetoric, it really allows us to see the underlying architecture of this crisis. Because when you look closely at the data from these government reports, you realize this isn't just a military conflict.
Right.
It is a fundamental real-time stress test of global energy and financial infrastructure.
Yeah, so let's start with the physical reality on the ground. We're tracking this rapidly escalating conflict involving the United States, Israel, and Iran.
And it's moving fast.
Insanely fast.
Yeah.
What stands out immediately in these security briefings is how directly this war is targeting global energy choke points. But first, just the sheer scale of the military assessment is wild.
The numbers are staggering.
Yeah, according to the latest government reports, the United States Secretary of War, Pete Hegseth, is claiming that the United States is winning decisively.
Which is a bold statement.
Right. And the operational footprint they outline is massive. The reports detail strikes on over 7,000 targets in Iranian territory.
7,000?
And alongside that, they're reporting the damaging or sinking of over 120 Iranian vessels.
See, achieving that level of operational tempo, it requires absolute aerial dominance.
Yeah.
The intelligence suggests we have moved way beyond, strategic, isolated missile strikes. We're in a phase of sustained, systemic dismantling of their infrastructure.
Right, and the hardware actually confirms that.
Yeah.
Because General Dan Kane, he's the chairman of the Joint Chiefs,
Yeah.
he noted they are penetrating deeply into Iranian airspace.
Yeah, and look at what they're flying.
Exactly. They have A-10 Warthogs, which, for context for you listening, these are essentially flying, heavily armored cannons.
They're built like tanks.
Yeah, they're designed for close air support, and they're flying those alongside AH-64 Apache helicopters, hunting targets right in the Strait of Hormuz and in Iraq.
And the thing you have to understand there is, operating slow-moving aircraft like A-10 Warthogs in broad daylight,
Right.
that implies the anti-air defenses in those regions have been severely, severely degraded. You don't fly an A-10 if they can easily shoot you down.
That makes total sense. But, the reports also show this pressure campaign isn't just contained to the Middle East.
No, it's global.
It is. International news broadcasts are tracking heightened United States pressure aimed directly at Cuba, of all places.
Yeah, that caught my eye too.
The objective outlined in the intelligence is to squeeze Miguel Diaz-Canel's inner circle, basically attempting to neutralize their international alliances.
Right, applying diplomatic pressure.
Exactly. And we're already seeing the ripples of this, right? Nations like Costa Rica are officially closing their embassy in Havana.
But while that military and diplomatic hardware is focused on, physical and political disruption, the immediate economic retaliation is where you, the listener, are really going to feel the impact.
At the gas pump.
Exactly, at the local level.
Yeah.
We are witnessing a direct, calculated assault on the world's energy supply chain.
Yeah, break that down for us.
So, the reports detail that Iran retaliated by attacking the Ras Laffan liquefied natural gas plant in Qatar.
Okay.
And to understand the gravity of that, Ras Laffan isn't just like a large facility. It is literally the largest LNG processing plant on the planet.
Wow. The largest in the world.
Yeah. So when the news of that strike hit the wire, European gas prices spiked by over 20 to 23%.
Oh my God.
In a matter of hours.
Well, because Europe spent the last few years aggressively pivoting away from Russian gas.
Yeah.
So they're relying heavily on Qatar to fill that massive energy void.
Precisely. It exposes this incredibly fragile supply chain. And the sequence of events here is critical. This Iranian strike on Qatar, it came right after Israel attacked the South Pars gas field, which is a massive shared energy reserve sitting under the Persian Gulf, right between Iran and Qatar. And now the rhetoric is just escalating further.
Right, because Donald Trump is publicly threatening a massive bombing campaign of the entire South Pars field if Iran attacks Qatar again.
Which is a huge escalation.
Right. Meanwhile, the United States Treasury is attempting to engineer this emergency economic maneuver.
Yeah, the oil release.
Yeah, they're planning to release 140 million barrels of unsanctioned Iranian oil that currently just sitting on the water.
Meaning it's loaded in super tankers just idling globally.
Exactly. And they're doing this in an attempt to temporarily suppress these surging global prices.
Right.
But wait, I have to push back on the logic of that maneuver right now.
Go for it.
From a strategic perspective, releasing 140 million barrels of seized oil to lower prices seems incredibly short-sighted. I mean, isn't that just a 14-day Band-Aid if the United States is simultaneously threatening to completely blow up the very infrastructure that produces that oil in the first place?
It is a glaring strategic paradox. You are touching on the exact severe tension between attempting this short-term market stabilization while engaging in, long-term strategic destruction.
It just doesn't make sense.
Flooding the market with those millions of barrels is literally designed to be a temporary shock absorber for global prices.
Right.
But it's like draining your entire life savings account to pay off one credit card bill while simultaneously setting your own house on fire.
Wow. Yeah, that's a good analogy.
Like the short-term debt is covered, sure, but the primary asset producing your wealth is gone.
Right.
If the Kinetic war destroys the South Pars field or, the Karg Island oil terminal, which, by the way, processes over 90% of all Iranian oil exports.
90%.
Yes. If that goes, that 14-day supply buffer just evaporates instantly, leaving the global market completely, totally exposed.
Which is terrifying. And, we were talking about the physical destruction of energy infrastructure here, but that physical destruction translates instantly into panic within the financial markets.
Instant panic.
And here is where the story takes this fascinating turn regarding the concept of control. Because traditional markets were simply not built to handle weekend warfare.
No, the limitations of legacy finance have literally never been more obvious than right now.
Yeah.
We have this incredibly revealing report from a major Wall Street bank that illustrates this perfectly. Because the Kinetic war escalated so sharply over the weekend, traditional financial exchanges, like the Chicago Mercantile Exchange, they were closed.
Just locked up.
Right. So put yourself in the shoes of an institutional oil trader for a second.
Okay.
The Middle East is erupting, the risk profile of your portfolio is going absolutely parabolic, and you are entirely locked out of the market.
Just because it happens to be a Saturday.
Exactly. Because it's a Saturday, you cannot make a single move to protect your capital.
I mean, that is an unacceptable position for an institutional fund that's managing billions of dollars.
Completely unacceptable. So they looked for an alternative, and they found it in decentralized finance.
Okay, this is the shift.
Desperate traders who needed to hedge their massive oil exposure, they flooded into decentralized crypto exchanges, commonly known as DXs.
Right.
Specifically, the bank's report highlighted platforms like Hyperliquid. Traders were buying these CLUSDC perpetual.
Which are what exactly, for people who don't know?
They're essentially digital contracts that track the price of crude oil using a stable crypto dollar.
Oh, I see.
So it allows them to bet on oil prices without ever needing to touch a traditional stock exchange.
That's brilliant.
And the daily volume for that specific oil contract on Hyperliquid, it hit an astonishing $1.7 billion.
Wait, almost $2 billion in daily volume trading oil derivatives on a decentralized crypto exchange.
On a weekend.
That is a massive paradigm shift.
It is. Traders are abandoning traditional mid-tier centralized exchanges for these decentralized networks out of pure necessity.
Because they're always open.
Exactly. A decentralized exchange offers 24/7 access. The blockchain does not observe weekends, it doesn't care about bank holidays.
Right.
Furthermore, platforms like Hyperliquid offer sub-second finality.
Break that term down for us, finality.
Finality just means the exact moment a transaction becomes completely irreversible.
Okay.
In traditional finance, settling a trade can take 2 full business days. On this network, it takes less than a single second.
That's incredible.
And crucially, there is no central intermediary. You don't have to trust some broker who might suddenly freeze your account due to geopolitical sanctions,
Right.
You only trust the underlying math of the smart contract.
So institutional money is really waking up to the reality that during a global crisis, a market that closes on Friday at 5 p.m. is basically a relic of the 20th century.
It's obsolete.
Traditional financial borders are literally being outmaneuvered by the speed of geopolitical events.
Yeah. And hey, if you are finding value in how we connect these global dots and unpack these complex systems for you, remember to support the New WU's Elfildor SV deep dive via the PayPal link in the description. Your support really keeps this research going.
Absolutely. Please check that out. But, okay, moving on. If this decentralized infrastructure is saving traditional oil traders during a weekend crisis, what is actually happening to the core crypto assets themselves?
That's the real question.
Right, because for listeners who might only track Bitcoin, what exactly is happening to the broader market right now?
The data paints a picture of extreme capital flight.
Really?
Yeah. The geopolitical tensions that escalated in late February have completely evaporated global risk appetite.
Because everyone is scared.
Exactly. When physical bombs drop, investors flee highly volatile assets. As a result, altcoin trading, which is essentially any cryptocurrency other than Bitcoin, is absolutely collapsing.
Wow.
The daily altcoin volume on the world's largest centralized exchange plummeted to $7.7 billion in March 2026.
7.7 billion. Is that?
To give you a sense of scale, that volume is down from peaks of $40 to $50 billion just months prior.
Oh, wow. That is a total crash.
It's massive. The altcoin season index, which is a metric used to measure whether these smaller coins are outperforming Bitcoin, it's sitting at a very weak 47.
Okay.
The speculative retail money has completely exited the building.
So the altcoins are just bleeding out. But what about Bitcoin itself? Is it actually holding up as a store of value?
Bitcoin is telling a highly nuanced story here, particularly when you analyze its performance against physical gold.
Okay, let's look at that.
The Bitcoin versus gold ratio is flashing classic historical bottoming signals.
Meaning it's about to tip.
Yes. On-chain analysts are tracking the Weekly Relative Strength Index, or RSI, and it has climbed from an extreme oversold level of 21 up to 33.
Okay.
Beyond that, there's a bullish MACD crossover.
You have to explain MACD for me.
Think of the MACD indicator like the market's speedometer. For 13 months, the momentum has been accelerating downward. But right now, that speedometer has physically crossed back into positive acceleration.
Oh, I see.
The selling pressure hasn't just stopped, it is actively reversing. Furthermore, the bulls are fiercely defending the $68,000 to $70,000 support line, which aligns perfectly with the 200-week exponential moving average.
Okay, but let me challenge that whole safe haven narrative for a second, though.
Sure.
If Bitcoin is constantly touted as digital gold, why has it been trapped in a 13-month bear market against physical gold leading up to this war?
That's a great question.
I mean, doesn't that initial massive drop expose a fundamental flaw in the idea that Bitcoin protects you during a geopolitical crisis?
It's a vital distinction to make, and it really comes down to understanding the mechanics of how capital flows during a global panic.
Okay, break that down.
Physical gold has a multi-millennia track record of institutional trust.
Right.
When nation-states panic, central banks aggressively buy physical gold bars. They do not buy Bitcoin, at least, not yet.
Makes sense.
So in the initial shock of a military conflict, gold skyrockets as institutional panic sets in. Bitcoin, however, functions as a real-time liquidity sponge.
A liquidity sponge?
Yes, because it trades 2047 globally when traditional investors get margin called.
Right, meaning their brokers are demanding immediate cash to cover failing trades.
Exactly. When that happens, they are forced to sell their most liquid asset first. And often, that highly liquid asset is Bitcoin.
So they sell it not because they don't believe in it, but because it's the only market open where they can instantly raise cash to cover their debts.
Bingo. The 13-month bear market against gold reflects the fact that traditional finance still treats Bitcoin as a high beta, risk-on asset.
Meaning it's highly sensitive to broader market swings.
Yes. However, the technical indicators showing that bullish momentum shift, like we just talked about, suggest the massive wave of forced selling has finally exhausted itself.
Okay.
The weak hands have been shaken out, and the ratio is historically primed for a structural reversal.
That is fascinating.
Yeah.
So we've been talking about how states are losing control of financial borders to the blockchain, right?
Right.
But nation states are actually fighting back with unprecedented, iron-fisted control on the regulatory front.
Oh, absolutely.
It is not just a global war pressuring these markets. Domestic regulators are aggressively cracking down, and it's forcing crypto companies to drastically evolve.
The regulatory winter we're tracking in these reports is severe, and it is highly coordinated across completely different jurisdictions.
Yeah, let's look at the data from Canada first. In a single day, Canada's financial intelligence agency, Jace, they revoked 23 crypto service licenses under their new Bill C-12 framework.
23 in one day.
Right. And that brings their total revocations to 50 in just the first quarter of 2026 alone.
It's a purge.
It really is. They are shutting down exchanges, custodians, and even localized Bitcoin ATM operators. It is a blanket zero-tolerance policy on compliance.
And that northern squeeze is mirrored by a massive crackdown in the south, too.
Yeah, in Paraguay.
Right. Paraguay was historically viewed as this haven for Bitcoin miners because of its abundance of cheap hydroelectric power from the Itaipu Dam.
Right, lots of cheap energy.
But under their newly enacted Resolution 4726, the local tax authority is aggressively auditing crypto miners down to the hash level.
Down to the hash level. Explain the mechanics of that kind of audit for us, because that sounds intense.
It is an incredibly invasive level of fiscal surveillance. The government is no longer just asking a mining company for, a spreadsheet of their quarterly profits.
Okay.
They are demanding the granular technical data of the mining operations. They want to see the specific computational output, the hashes generated by the physical machines.
Wow.
And then they want that cross-referenced with the exact electrical draw from the grid and tied directly to the specific wallet addresses that are receiving the newly minted Bitcoin block rewards.
That is insane. They are mapping the entire pipeline from the power grid to the blockchain.
Exactly, to eliminate literally any possibility of tax evasion.
Wow.
And because of this dual squeeze, stifling compliance in Canada and forensic auditing in Paraguay, we are witnessing a massive exodus of crypto capital and infrastructure toward jurisdictions that actually offer legal certainty.
Right, places like Panama or right here in El Salvador.
Exactly.
But how do the massive corporate entities survive this environment? I mean, you have retail trading volume collapsing down to 7.7 billion on one side, and state-level regulators functionally choking your operations on the other.
It's a brutal environment. Survival requires ruthless, structural evolution.
Give me an example.
The Q4 results from Gemini, which is a prominent crypto exchange, they offer a perfect case study here.
Okay.
Despite operating in a brutal bear market under intense regulatory scrutiny, they just posted their best revenue numbers in 3 years.
Wait, really?
Yes, bringing in $60.3 million, which is a 39% increase.
Okay, increasing revenue by nearly 40% when retail users have totally abandoned the altcoin market. That is very counterintuitive. How did they restructure to achieve that?
They fundamentally altered the DNA of the company. First, they executed severe cost-cutting measures, slashing 30% of their total staff.
30% is a huge cut.
It is. But they didn't just fire people and expect the remaining engineers to somehow work twice as hard. They replaced the workflow entirely.
How so?
They integrated artificial intelligence into over 40% of their production code.
Oh, wow.
The executives literally stated that deploying software without AI assistance today is akin to showing up to a modern office with a mechanical typewriter.
That's a wild quote. So the AI is literally writing the code that the laid-off engineers used to write,
Yes.
effectively vaporizing their previous massive overhead costs.
Exactly. And with that much leaner structure, they pivoted away from relying on spot trading fees, because those were drying up, obviously, and
Right.
diversified into new high-demand revenue streams.
Like what?
They aggressively moved into predictive markets where users can financially back the outcomes of real-world events, and they launched crypto-backed credit cards.
Ah, I see.
They didn't just survive the regulatory squeeze, they built a completely different machine to operate within it.
That makes total sense. And, bringing this overarching theme of strict state control back home, we can look at how El Salvador is evolving its own domestic security apparatus.
Right.
While the state might be embracing digital freedom on the blockchain for corporations, physical borders and domestic laws are being hardened with absolute finality.
It provides a really fascinating contrast in how a state exercises its sovereign power.
It really does. The reports detail new legislative reforms presented by Security Minister Gustavo Villatoro to the Penal Code.
Okay.
They are officially creating a brand new crime under Article 344A.
And what does that state?
Crime is defined simply as membership in a terrorist organization known as a gang, and the mandated punishment for this specific charge is life imprisonment.
Wow. That represents a massive structural shift in the philosophy of criminal justice.
Yeah.
The state is no longer just reacting to individual crimes, it is codifying the very existence of these organized groups as a permanent existential threat to the nation.
Exactly. And the law builds in specific, uncompromising, aggravating factors.
Like what?
Well, if a convict is proven to be a leader, a financier, or even a negotiator for the gang structure, the law dictates they must serve a minimum of 40 years in a maximum security setting before they can even be considered for any type of supervised release regime.
40 years minimum.
Minimum.
It effectively separates organized terrorist gang members entirely from the framework of common criminals.
Right. Under the old system, if you robbed a store, you might just be charged with illicit associations. Now, if the state proves you are part of the gang's operational structure, you are removed from society permanently.
It's a definitive line in the sand.
It is. But there is a striking statistic in these reports that I want you, the listener, to really consider. Homicides have plummeted so drastically in El Salvador that currently 80% of all murders are categorized as being due to intolerance.
Meaning the violence is stemming from, domestic disputes, alcohol-fueled fights, or neighborhood arguments.
Exactly.
It's not from firearms, and it's certainly not from organized gang warfare over territory.
Exactly the point. The weapon of choice in these statistical anomalies isn't even a gun in most cases.
Right.
It forces us to look at how an entire societal environment shifts when the state achieves a total monopoly on security. They have completely eradicated the illicit gang economy.
It's huge.
Massive. The suffocating fear of localized extortion is just gone. But the stated penalty for attempting to rebuild that organized criminal life is a literal lifetime in a concrete cell.
And, the eradication of that extortion layer creates a massive economic vacuum.
Right.
But ideally, it's a vacuum that is quickly filled by legitimate, taxable economic activity.
Right.
When the state enforces its baseline laws with that level of absolute certainty, it fundamentally alters the social contract between the government and the citizen.
It really redefines the reality of living within those borders. And, just a quick reminder, to ensure we can keep bringing you these deep dives, analyzing these massive geopolitical and financial shifts, please support the New W's El Salvador SV project using PayPal or crypto. The links are right down in the show notes.
Definitely. Pulling all of these complex threads together today, though, the broader implication of our current geopolitical moment becomes pretty clear.
Yeah.
We are watching the world fiercely split in two diametrically opposed directions at the exact same time.
That's an interesting way to frame it. How do you synthesize those two directions for our listeners?
Well, on one hand, you have nation-states enforcing their physical borders and their physical laws with maximum prejudice.
Right.
We see this with the United States projecting massive, destructive military power in the Middle East, threatening to bomb energy infrastructure to assert geopolitical dominance.
Yeah.
And we see it locally with El Salvador enacting literal, unyielding life sentences for gang membership to secure its domestic borders. The physical state is roaring back, and it's demanding absolute, unquestioned control over its physical territory.
But the digital realm is entirely rejecting that premise.
Completely. In the digital realm, traditional borders are evaporating. When the Kinetic bombs fell in the Middle East and the highly regulated, state-approved traditional financial markets closed their doors for the weekend.
Right, because it was Saturday.
The capital didn't just sit still. Billions of dollars instantly flowed into decentralized, borderless networks like Hyperliquid.
Which is wild.
These are mathematical networks that no army can bomb, no regulator can easily shut down, and that certainly don't close their doors at 5 p.m. on a Friday.
It is the ultimate paradox of the modern era. The state has never been stronger physically and, honestly, never weaker digitally.
Exactly. So I leave you with this final critical thought to explore on your own as you navigate these markets. As we move forward into this highly volatile future, which form of sovereignty do you think will ultimately define the next decade? Will it be the physical, ironclad law of the state, or the decentralized mathematical law of the blockchain?
Man, that is a question that will undoubtedly shape the rest of our lives and our portfolios. Thank you for taking the time to get well informed with us today. Keep questioning the narratives, keep looking closely at the underlying data, and please don't forget to share this deep dive with your friends. We'll see you next time.